Hey, what's up, guys? I thought I would kick off the week with a video on YouTube. Didn't do one last week because we really didn't have a change worth noting from my previous video. Now we do. So the previous video, I talked about a potential that we could see a bottom in here. It was imminent that a bottom was going to take place because of the oversold conditions that we were seeing on that weekly time frame. So let's go hash that out. Let's understand when you're looking at a very short period of time like this in terms of candles, 5 candles, this exhaustive, although they're weeks, so it is theoretically not a very short period of time because it took 5 weeks, but really just from a candlestick time frame perspective, it's just 5. So really I wanted to understand how oversold are we if we've sold off for 5 straight weeks, each week significantly low. And I was highlighting the levels on QQQ, but in this case, I'm just going to go and talk about ES, the overall market. Really, since the dot-com bubble, 1, 2, 3, 4, 5 times in the entire history since the dot-com bubble have we been that oversold on a weekly time frame from a 5-period condition. So we knew a bounce was imminent because you need to correct. You cannot sustain these oversold levels. What could have happened was a flush, volume climax, clearly market bottom. We didn't see that. What we saw was, hey, they started to give us a little bit of a gap down on that Sunday night futures, and then the entire day was bought up. So this was a back test of ES off of this range, and if you look at NQ, it was a back test of that range as well. I like to use the futures charts for all my levels. I don't like to use SPY QQQ, but it's okay to do that, but you will miss a lot of signals. So there's good and bad when you look at either or, but my advice is always put the higher importance on the futures levels, because futures gives you way more data, way more information as to levels that the market has traded in, supply zones, demand zones, gaps, anything. You will find better levels to use off of futures. And that's why I use these charts. So if you were to just look at this and say, why did we bounce from here? Okay, 0.382, back test from here. And if you were to go relate it to QQQ, you don't see that. You don't see that back test. Now, not to say it's not going to happen. And we got a lot of information this week, which I'm going to talk about, and this weekend with the negotiations happening in Islamabad, which don't look like they went too good. So futures are not looking like it's going to be a good open. Let me just double check what futures look like at the moment. At the moment, down 1.6%. That's not good. That's not good. But let's talk about what just happened on ES. 2 straight bull weeks in a row, engulfing candlestick. If you look at what happened last year, okay, we didn't see the 2 bull candlesticks in a row and then drop. We just had a straight drop last April. We had a big piercing pattern candlestick, which marked our bottom. Then we had an indecision, right? We traded just off the highs, a little bit of a pushback. We found that higher low, and then we ran. So if we're going to see anything like this now, just run, we're going to anticipate that we see something like this, right? We're going to see a stall on this weekly's candlestick, and then the following week would be the buy up and continuation. If we look at what happened in the bear market, we had 2 big bull weeks off of the bottom, indecision doji, which ended up coming from our golden zone, and then we sold off. So that's where the risk is. The risk lies right now going into this week. The precision closed us. Like, look at the precision in here, because you got to understand your levels as it relates to your Fibonacci's. The market, if you haven't learned Fibonacci's, you're doing yourself an injustice as a trader. Big time. When you look at a retracement, overall, we understand from my perspective, I think this is a 4. I think a 4 has been placed, which marks our bottom. So we got our 1. Let's draw that again. We got our 1, our 2, our 3, and our 4 has completed. That's my bias. My bias is that we are going to go up from here, and our 4 is completed. My caution, my always being aware of potential alternate scenarios, which would negate the roadmap that I currently envision, because if you don't have, hey, a cautionary viewpoint to your own view, what would be the thing that would invalidate what I'm currently thinking. So I'm prepared to mitigate or protect myself, protect my positions, mitigate losses, take off wins, whatever it is, in case I'm wrong. Because when you get too much of a bias in one direction, you put yourself in a very vulnerable position. And remember, at the end of the day, as a trader, your job is not to think, oh, I'm right, and brag about being right. It's to try and make money in the market. That's it. And realize, oh, if I'm wrong, where I need to protect myself, where I need to make an adjustment, great. You could do that a lot easier by having alternate roadmaps. So you're bullish, I'm bullish. Where could we go wrong? This is where we could go wrong. We could go wrong right in here. And I didn't like how they closed us within this range. So what's the scenario in here? I've been thinking this was a 4, which was some sort of an ABC correction right in there. Okay, so in that ABC, we've got basically a 1, a 2, a 3, a 4, and a 5. So we complete in here, and this marks a reversal to the upside. So we could still very much be in that uptrend, in the continuation now, which would lead us to a significant high. Okay, we would say we are looking at a huge run right now. We need a deal. We need a deal to get that run. But basically, we would be saying, here's the 4. Where's the 5 going to go? There's so much upside in a 5. Doesn't feel that way, right? It feels like everything's negative right now. And the market doesn't seem like, with the way Trump's operating and all the headlines and all the negativity, that we're going to go on a huge run. So we definitely need news. We definitely need a deal. You could see how the market responded the past 2 weeks with the potential that a deal was going to take place. This is a huge reaction. Like, the market is nothing off of all-time highs. Like, it's 2% away from all-time highs. So you get a deal, and the way stocks have retraced, there's a huge potential for a massive run. And this is where the massive run would go to. I would think 75.94, 83, 89, 9,000. Huge run opportunity after basically consolidating since October, November, December, January, February, March, April. This is a very significant period of time of consolidation. Price didn't consolidate that much, 10%. That's good. That's just a correction. That's not a bear market. That's just a correction. That's fine. 7 months, 10%, that sets up the next leg to go up. But we need a deal because we are really news driven right now in the market around this conflict that's happening in Iran. And this weekend's news, not looking good. And here we are, down 405 points on US tech, down 1.6%. And they closed this pretty much in precision. A couple of things I was looking at going into the bounce was the reaction here. And if you notice the reaction in there, 1, 2 touches, 3, we tried to hold it again, and then we tried to hold it again in here. Very notable. Try to hold it. And then what happened? We lost it. We flushed. And when we flushed, we back tested. Well, we back tested, and we couldn't break up over it. And in here, it was one tweet that happened like at 8 o'clock in the morning. You know, Trump made his insider friends a lot of money. Barron, Kushner, whoever. They made a lot of money. Retail didn't get to make money. And then we sold sideways for 3 days, and then the sell-off came. So we couldn't break through here. And again, we back tested. What happened? We got back into the zone. We stalled. We got into it. We hung out. We weakened the zone. And then we got the break. And the break was a significant move based off of the ceasefire. So again, very much news driven. Ceasefire, if you were in overnight that night, you would have made some pretty good money, but then the trading became a little bit tight, except Friday. Friday, there was some really good moves in the market. That's the one thing I'm wondering. So the anticipation that the breaks are going to happen to the upside, or just some traps happening. But there was some strong moves on Friday. But what I don't like is when you close in the platinum zone. And this is all we did for Thursday and Friday. Thursday and Friday, all we did is trade within the platinum zone. There was no break above. And this is where you have your concern that potential downside is going to happen. What does that mean? So in this move, we say, here's our 1, 2, 3, 4, 5. Okay, and it completes. So we are going to gap down today. Gap down, gap down, gap down. Yeah, we're going to gap down today from Friday's candlestick. We're going to see a much lower open. So the question is going to be, did we just put in our lower high? And now we're actually going to dump. That's the risk. And that's the potential roadmap. That in here, because we couldn't get a close over, that's marking a top. And we're actually going to go for another sell, another sell-off. So no deal, I believe this could happen. And I don't mean no deal today. I mean, we are gapping down, assuming nothing changes between now and 6 p.m. I think Trump is talking at 6 p.m., but I don't think they have a deal, right? It's no deal. So unless something changes, we are going to gap down. And then this risk is going to be in play. So we're going to have to see what the price action looks like. We could say, no, that's fine. They didn't get a deal. This move is still complete. This is our first leg. Okay, this is our first leg. Because remember, from a big picture perspective, right? If this is our 1 and our 2 and our 3 and our 4, and then we're in our 5 now, is within this, we're going to have 5 legs, right? So we could say our 1 has happened and our 2 is going to take place based off of, oh, not sure we got a deal, right? And then we got a deal. And there's our 3, our 4, and our 5 within that leg. So we're going to be in a very cautionary state now because we stalled in here and because our correction is starting. So what are we correcting? We're correcting this move. This is where trading becomes difficult because the first move is typically hard to catch. We're downtrending in the intermediate term. We're still in an uptrend in the long term. Our monthly charts are still in an uptrend. Clearly, bear market low, higher low, last April low. We are still in an uptrend. We haven't lost the higher low trend on the monthly. So in that term, we are in an uptrend. Remember, we're holding higher lows, we're making higher highs. This keeps us in an uptrend. In the intermediate term, the weekly has reversed. We have lost the higher low trend, but we have not confirmed a reversal in the market. Why? Let me fix this up in here because we've got our higher low in here, right? In here, you could say higher lows here, you could say higher low. It's all, it's very tight. There's really no clear reversal of the trend, right? If you look at that, see, from a Heiken Ashi candlestick perspective, you can see if there was a little bit of reversal. There wasn't, just until recently. So going back to this, in here, you could see a double bottom, right? In here, you could see a double bottom. So I would say this is a notable point in the chart. And that's what I was talking about on the daily time frame. So we have our high. We have our high. We have the previous higher low. We broke to a lower low. Now, the question is, does the trend reverse? The trend reverses is if we do not break to a new high. We actually set up the lower high and we break to a lower low. Okay, so this weekly trend would have been lost, confirmed that we've been lost. As of right now, we made a lower low, but we didn't make a lower high, lower low. So the trend is not completely reversed as of yet. Still, we would be looking for a monthly higher low above 5,000, which keeps us in this significant uptrend on the larger time frames. If we were to lose that, then obviously we're in a significant bear market. So our risk is now, are we shaping up that weekly lower high to go to the weekly lower low? And that's where we're at risk here. And this is where trading gets a little bit difficult because this is where the money's made. The money's made in getting these moves correct and allowing a big window of opportunity. Because the window of opportunity we had in here was one basically strong day. We traded sideways, indecision if we're going to break. Then we got tweet on a ceasefire deal, and we broke. So the window looks like, oh, that's a pretty big window. But a lot of names didn't respond. A lot of names didn't react. All the names will respond if we are going for that 3. This is the money making move, the big break, the big run. All the names are going to respond to that because the buying is going to be strong and furious. Right now, it's like indecisive buying. Do we have a deal? Do we not have a deal? I got to stay protective. Names not all. It's been a stock picker's market. Like if you look at Friday, what happened Friday? The market was flat. Market was flat. And we had, let me see if I can bring this up right now. We had this. This is what the market looked like. Some big gains and a lot of red. So not very strong. We have indecision on this market. Are we breaking bull or are we going down? And it's clear. It's visible right now. It's visible right now because they paused us right in the platinum zone. So this is what we're going to be watching this week. Are we going to see a strong move down that breaks? Because what we would see was a sell tonight in futures and a continuation sell tomorrow and Tuesday. Or, no, we're going to get the ABC correction. We're going to hold the previous psychological level, and then we're going to start our next leg. So we're gapping down today. We're going to gap down 1.5%, 2%. Okay. So we're not going to be in the major zone as of yet. Okay. There is where I'm going to want to hold. If we do not hold that, then we have risk that this is going to break down. However, we're going to look at one more area on this move. And it's going to be a back test of the golden zone, which it's amazing how they print these charts. It's like somebody drew them and then the news comes out first, right? Draw the charts, then the news takes us to those levels. Remember where we were walking down this entire downtrend. Look where the back test was. See that? Look where the golden zone is going to line up. If we get there quick. So, how do we know if we're going up or we're going down? That's where you make the money, is knowing. That's what you're going to have to respond to. We're coming down to start. Going to open up at about 67. Is that right? 67? Yeah, we're going to open up at about 67. 67 is this breakout candlestick. Major candlesticks in a chart are very important to hold. This candlestick in here, the entire candlestick is the breakout. If we could hold at any point in this candlestick, we're solid. Then we just look for some sort of an ABC correction. And an ABC doesn't need to come down and make a lower low, right? It can make a flat, it can make a double bottom, and then indication of going up. If it comes lower, then I would want to see a bounce above this range and then lower, but still holding the breakout candlestick. This would give me the most confidence that we have strength to the upside. And watching the volume, watching the headlines, okay, great. Things look like it's going to hold. Then we got the upside. If we do not hold this candlestick, that's a major concern. The line in the sand is going to be holding down at 65. That demand zone that we created on this break. This entire range is massively important for springtime, April, May, June, 100%. This entire range. Line in the sand is going to be 65. If we get down into there, it's going to be a lot negative headlines, fear, people not feeling comfortable, but it's going to be the must-hold zone. Just like this has been the must-hold zone for a bear. And it did hold. It did hold. They printed that perfectly. Look at that. Printed that perfectly going into the Islamabad weekend. So big week ahead. Stay safe. Hopefully you make some money. Hopefully good times are ahead. They will be eventually. Just sooner or later. Peace out, everybody.